Hello, dividend executives. Welcome back. The stock market's closed today, but month 5 has come to a close in our margin investing series. I want to go over it, where we're sitting, what our buffer is, how much we paid in interest, what has happened to the rates since we started this series, and of course, how much money did we make investing with margin on Robinhood. So let's jump into it. First things first, of course, we jump into Robinhood. We take a look at the actual account where we are investing with margin. As of right now, this is a $35,000 account. I think we're using just under $10,000 as of right now, but last month we averaged one of our lowest margins since the series started just 4 months ago. So buying power, you can see right now, is $5,822.60. Margin total $27,000, but keep in mind, options collateral is about $12,000 of that. You pay zero interest on cash secured puts unless you get assigned and you actually own the shares. So when we come back and we look at all these puts I have on the table, MSTY, obviously that's about 5,000, CONL, 2,000, let's see, 2,200 there, and then Clean Spark, of course, almost just under $3,000 right there. So when you're using cash secured puts, you don't pay any interest on those. So when we're looking at the margin total, just keep that in mind. The options collateral is not part of that. The margin used, that $9,135.63, is what we actually pay interest on. Pending orders, those are just the dividends that will probably hit on Monday. We have all the DTEs that are going to be reinvesting, and then YMAX as well. So that is how we get the number of the $5,822 of buying power left to buy stocks with. So margin status is low risk as of right now. We have a 32% buffer. And of course, if we didn't sell cash secured puts, this would go up significantly. But we like to make our money work for us. And for me, I like to sell cash secured puts to boost the returns on the account, but also to pay for all of the margin balance. But let's jump into it. So portfolio value, $35,216, low risk. You have $1,000 because I have Robinhood Gold that is completely free. So 1,000 of this is completely free, but of course we are going to be using that. We are paying a daily interest rate of $1.30 in interest, which isn't too bad. And now the rates are down to 5.75. So the more margin you use, the less you pay in interest rates. But I don't think I'll ever get to a point. I mean, maybe, but I don't think I'll ever get to a point where I'll use even 50K to 100K, which is at the 5.55, or 100K to 1 million, which is 5.25. So right now we're using the less than 50K at the 5.75, and our first 1,000 is free because we have Robinhood Gold. So that's all the margin, full transparency there, of course. And then let's jump into the actual history, right? We've showcased this is part 5 of the series, but we've showcased since we started this journey back in September when we started using Robinhood interest. 8,622 when we first started the series on August 10th to September 9th. The interest rate was 6.75 back at that time. And that's when we started saying the rate cuts are coming. I want to play into all the rates getting cut and the money being cheaper. And so we started to leverage some of those funds. And you can see it now, but 6.75. And then on our last payment that we just paid on January 6th, we paid 5.83% on average for our interest rate, and $37.21. And that's from December 8th to January 7th. And yeah, so under $8,000 of margin. So not too bad there, not a whole lot of margin. Like I said, I want to keep it under 10,000. Preferably, I'd like to get it to the $10,000 mark for right now. But maybe that's the wrong thing to do. I don't know. I'd like to hear you guys' opinion. Do you think I should use more margin? Do you think I should use less margin? I was using up to almost $17,000 worth of margin in this series, but as of late, we have dropped down. Now, what are we using margin on? I am using it on 3 different ETFs: QDTE, XDTE, and RDTE. If you're not familiar with these, QDTE sells covered calls on the NASDAQ 100. And then we have the S&P 500 on XDT, and RDT is a Russell 2000. So the reason why I picked these 3 is because they're a little bit less volatile than single stock tickers. Obviously, with the NASDAQ being over 100 stocks, the S&P being over 500, and RDT, or the Russell 2000, being over 2,000 stocks. So That's why I picked those three. Less volatility gives me exposure to the entire market. And of course, they sell daily options and they pay out every single Friday. And then I have them reinvest every single Monday. So that's why I picked those three. And I'm just going to continue stacking the shares, right? The first goal in 2024 was to get these all to 150. We obviously surpassed that. And we have some goals to get them to 250 by the end of this year. But we're probably going to set and forget it once we get to that, I don't know, probably 210 to 220 mark on all these share counts. But I am just waiting because the market has been pulling back, right? If we look at, let's just look at QQQ, for example. If we look at QQQ over the last week, it got pulled back 11.79 or 2.2% over the last month, down almost $21 or 4%. And yeah, we're still up 3% over the last 3 months. So the last month's been pretty bad for QQQ. We're going to see a similar picture on SPY. 1 day down 1.52%, 1 week down 2%, and 1 month down 4.4%. So that's why we're seeing a pullback on all of these. And then let's just look at IWM. Similar picture, down 3.57% for the week, and for the month down 9%. So not good. When you see this kind of thing, then that's going to pull back obviously all of these stocks, right? So let's take QQQ for example. Over the past week, down 3%. Over the past month, down 9%. So not looking good there. And then RDT, similar picture, down almost 5% for the week and down almost 11% for the month. So not good there. But the total return is what we're focusing on there. So that's how much we paid in dividends. That's how much buying power we have. This is how much margin we're using as of right now. But I want to jump into the spreadsheet, of course, so we can look at the actual numbers. Okay, so we have this pulled up here. This is where we've been tracking it. We are in month 5 as of right now. This is December 8th to January 7th. We paid $37.21 in margin interest, which we just looked at. Our average rate on that was 5.83%. You can see we started at 6.75, then went down to 6.41, 6.25, 6.0, 5.83. Now, the Fed has come out and said we would probably be lucky if we get 2 rate drops this year, which was a lot less than we were thinking, but it is what it is. So if we get 3, that'd be fantastic. If we get 2, we're still on the way down, but I'll tell you what, 5.83 is much better than 6.75. So $37.21 is what we paid in interest. We used a little bit more margin than last month. Last month we used $7,375, and we had a massive amount of dividends this month, right? So $839.71 is all the dividends I received between QDTE, XDTE, and RDTE. Obviously, it's got to be prorated, right? Because as of right now, or as of this video, the average capital I had in those funds was just under 20,000, right? $19,867 was the average capital I had. And we only used $7,661 worth of margin. So we had to prorate it, about 38.5% utilized, which brings our prorated dividends down to $323.84, just so we can get a clear picture based off of how much margin we're using. We can't obviously say we received all $839 of dividends just from the 7,600. So that's why you see the prorated dividends there. And then the total net gain there obviously is just a 323 of the prorated dividends minus a margin total. So we made $286.63 after margin paid just on our DTEs investing in margin. So it's another win. So far, these are all green. Every single time we've done this, we're making way more than our interest. Even if you were to factor in some taxes there, a lot of these are return on capital right now, so there's way less taxes. But even if you factored in taxes, we're still winning. So it's hard to not look at this strategy or want to scale this strategy up. But I'm just trying to stay diligent, just trying to keep it a manageable margin usage. But I am looking at scaling this up, especially with the big dips we've been seeing. Will these dips end up being dips, or will the market continue to pull back? That is the question. But I think it's smart to just at least scale this up a little bit more. Obviously, we were at the 7,600 over the last 2 weeks. I've been scaling up a little bit more. That's why we're closer to the $10,000 mark. But I'm flirting with the idea of buying even more shares. Now, I want to look at, obviously, we have month 1, 2, 3, 4, and now 5. I want to look at how these funds are actually doing, right? So RDTE, this is month 5 right here. We ended up dripping, let's see if I can, we ended up dripping what? Average of 1.319 shares per week with RDTE, 5.276 shares in total over this period. So not too bad. When it comes to dividends received on RDT for that period, $221.15 is how much we received in RDT. Obviously, we had some big payouts there. That $90.77 on the last one definitely boosted it, but it's nice to see the share count climb, right? From last period, we started with 74, ended with 129. This period, we started with 130, ended it with 153. So good looking there. RDT total return is not looking that great though. Like I said, when we were looking at IWM chart, the Russell 2000 has pulled back massively. So our total return on this is basically break even. So it's a bummer to see, but that's why I'm thinking about, should I buy some more shares on this dip or will we continue dipping? Either way, we're going to let the shares ride and we're going to continue to let this fund pay us back. XDT, a much better picture, but a very similar picture, right? We had some massive payouts in December, as you guys probably recall. The date was, the 12/20 payment. Look at that, $101. Absolutely massive, right? We started with 146 shares. We ended with 161 shares. We dripped ourselves, probably 5. Let me just see. Yeah, we dripped ourselves 5.39 shares with an average of 1.3 a week on XDTE. Our total dividend payout was $274.36 on XDT, which is absolutely massive compared to the previous period where we were at 169 with 5 payments. And then our average share count was 156 shares. So 156 shares, not too bad, but this picture looks a lot better. Total return of 5.33%, and that is including what we are sitting at the fund as of right now. Big pullback on Friday, so it really reduced a lot of the returns on these, right? Most of these were hovering around that 8 to 10% until the last 2 weeks. So we shall see. QDTE, the final one of the picture. Let's look at how much we received in dividends. Holy schmolies. $344.20 with an average of $86 a week on payment, which, I mean, it just destroys anything. We had some massive payments there. You can see the drip. Look at the drip. Average of 2.1 shares per week or 8.4 shares in total that we dripped over this period. Started with 149 shares, ended with 166. Obviously 8 of those being added just from drip itself, but QDT looking a lot better. 6.59% total return since we started this journey back on August 2nd, and just over $500, right? So we've received over $1,000 in dividends, which is nice, and we're up over $500 in total return. So that one's looking good. Last picture here that I want to showcase is just where we're sitting capital wise, right? So the monthly dividends on average for QDT over this period right here, 12.18 to 1.7. We're talking QDT 215, XDT 177, RDT 133. If you take all my share count, and right now the total capital that I have invested in these three is about $22,000 worth of capital. And if we set it and forget it and continue getting paid this exact same payment, we're talking about 24 months until all of our capital is returned back to us, and these funds can truly just ride on house money. That's how long it would take. And then the average weekly dividends, 54 cents for QDT, 44 cents for XDT, and 33 cents for RDT. So that is month 5 in the books. Hopefully you guys like the data. There's a lot of people that come on here and they showcase coulda, shoulda, wouldas. They look at all the data that's online, but I showcase real numbers, real shares, real investments, and I just want you guys to actually see exactly how much we're paying, how much we're making. Is it worth it? Is it not worth it? We just showcase it all. So that's month 5 in the books. We'll see what month 6 looks like. Like I said, my plan is probably to increase the margin a little bit from where we were. I know we had the almost 17,000 back in September, October at the 16.5, but I am looking to increase it a little bit, especially if we continue to dip to lower my average cost. So thank you, everybody. As always, please drop in the comments if you think I should be buying more. What margin total would you be comfortable with? or do you think I should cap it with this portfolio? And as always, happy investing. Don't forget to drop a like. We'll catch you next time.